All right, my name's Carlos Cruz. We got Ryan Gonzales here. I'm in mortgage. Ryan's in real estate. We've actually worked together investing. We kind of just wanted to sit down and talk with you guys and see where things are at, share a little bit about what we've been doing lately, and maybe address some of the concerns and issues that's in the market today.
Definitely. We've got a lot of questions about, is it a right time to buy a house right now? What are rates doing? We're going to talk a little bit about that. How can I afford a house if I don't have a lot of cash? The biggest concern right now is affordability in general. So we're going to talk a little bit about that. We've seen a lot of concerns with the recession right now, inflation concerns. So definitely want to talk about that and address that and how we can help. One of the things I want to jump into right away is, what are rates doing right now? What have they been doing? What do you see the future? What do you see in the future for rates? Is there light at the end of the tunnel?
I would say when it comes to rates, that is unfortunately only part of the equation. If you look at the sales price of a house today versus a year ago, it's more expensive today, which means in a year from now, it's going to be more expensive again. If you're going to wait and worry about what are the rates going to do, the amount of money you've lost in that time that price changed isn't going to offset that $100 savings that you got on your payment. Really, I think the conversation is, if you're buying a home knowing that it's more of a buyer's market now, using some of that leverage, right, to get some of those closing costs paid, if not all of them. Maybe use some of that money to buy down the rate. Do you know that you can get up to $18,000 on an FHA loan for a $300,000 home from the seller? Now, are they going to give up that much money easily? Probably not. But I think that's where your experience comes into play, knowing that you know how to speak to that listing agent, because you've been doing this how now? How many years?
12 years.
Having 12 years of experience, you've already built a network of people that you know in this business. They trust you. They trust that if you're bringing a deal their way, it's a legitimate deal. And so a buyer who might have only seen one visitor, a seller that might have only seen one visit in 30 days might be a little more open-minded to you.
Absolutely.
So if we look at situations where only focusing on rate, I think you're going to have a lot of buyers miss out on good opportunities to get into a home. My second home in 2007 was a 6.5% rate. And when I got that rate, I almost jumped on the guy's desk due to a dance, because my rate in 2001 was 9%. That's the reality. It's tough, but it's always been tough. That's why owning a home matters.
Yeah, to piggyback off that point, when it comes to buying opportunity right now and how rates come into play with that, like, a lot of people are sitting on the sidelines right now because rates are up, and they're really comparing this 6.5 right now, I would say, to a 3.5. They're comparing it to a rate that we've never seen before. And when you compare it that way, it blows people's minds, and it's a lot more costly. But they have to keep in mind.
I don't mean to interrupt, but here's a question I got. So when rates were 3.5%, how much concessions were sellers chipping in?
I was just going to say that. Yeah, when rates were that low, sellers were not giving away any type of concessions.
So you were losing out on thousands of dollars.
Yeah, matter of fact, in 2020, 2021, some of the hottest years we've seen in a long time. I don't know when we've ever seen inventory this low, but it was at the point where sellers were having their way with buyers. They were getting anywhere from 10 to maybe 50 offers on a house, which is insane.
Ryan, I had to pay $40,000 over asking price to get my house.
I paid 20 during that time. Yeah. There's a bunch of buyers that were paying way over asking price, not getting any concessions. I had to, use my commission as leverage in my deal in 21 because there was 18 offers I was competing with, and that was in the first weekend.
Yeah.
So a lot has changed, but any buyers that are getting in the market now or just hearing about the market, all they're hearing is, oh, rates are high, just wait. Meanwhile, home prices are not waiting. They're actually consistently going up because even though the inventory is higher, it's still not high enough for there to be enough slowdown in demand for home buying. So because of that, home prices are still going up slightly. Now, there are some areas which you probably see on social media or the news that have gone down in value and are selling for less, and people are getting crazy deals. But it's not happening nationwide. It's not happening in Texas. It's not happening in most of Florida. There's some really hot states down south, maybe in California. They have a number of problems over there.
That's a different situation.
But maybe in some of the higher price cities, higher living cost cities like maybe Chicago, New York, maybe. I don't really know those markets as well, but I know down south for sure, and I know the national average. Home prices are not slowing down. They're going up slower, but they're not slowing down. So if you're waiting on the sideline for rates to go down, there's a lot of pent-up demand right now, and what's going to happen right when those rates go down, all those buyers are going to jump in the market, and then we're going to be in a similar situation where you're just not having much, you don't have much leverage as a buyer anymore. And so you're not getting as much concessions. You're not having as many options. You're having to stay on your toes. You're having to bid on that house quicker than you want to. And that was one of the hardest things to tell buyers or try to not really convince them, but have to be devil's advocate in that situation where houses are going off the market in a couple of days, in a weekend, maybe a day, depending on how many offers they got. So you're trying to push them to understand that market when it was so hot. Hey, you got to make a decision now. That was back in 20 and 21, but now we have the time where they can really take the time. They can do numerous inspections. They can make sure the house is right for them. And then we have a ton of leverage. Like just recently I did a deal where house is sitting on the market for about 200 days. And so we knew we had the leverage, started checking comps.
Oh, wow, 7 months.
Yeah. Yeah. And that's not normal, but it was overpriced. From the get-go, it had dropped a little bit, but they were due for a drop, I feel. So we went in under $20,000 from the original ask, and we asked for all the closing costs paid, which is about 13 with title, probably 13, 14, and we got it. And they were reluctant at first. They sent us a counter, but we stayed strong. They didn't have any other activity at that time. And sellers at that point, sellers are motivated. These guys were had already moved out of town. The house was vacant for a couple months. Dude, we probably could have gotten more if we really stuck to it and tried to ask for more. But I thought that was a hell of a deal. We ended up getting them a full replacement on their AC and a bunch of other repairs as well. And the buyers were happy. They were really happy.
This is the loan, Ryan, that I worked on. And what was interesting, because I'm a broker, one of the conversations I was able to have with the family was really trying to ascertain what was important to them when it came to the rate, when it came to the payment. And they made it crystal clear that they wanted the cheapest rate, which when you have 165 investors and lenders, you can get the cheapest rate, which is what I have. But I was concerned because this particular lender is very hard to work with, and it's a very clumsy process with them. And even though we had a full 30 days to close, I was nervous. And at the very end, 2 days before closing, the lender didn't suddenly like their income. And I had to fix it. And I know it frustrated the family, and it was a legitimate frustration. I don't want families that don't understand what I'm doing to be frustrated at me. It's not warranted, but I have to accept it and I have to own it. So knowing that they're going to sell their home, I'm offering to chip in some of their selling costs if they have a lender that, or a buyer that works with me. That way, they feel a little more equitable in that situation. It's tough, and I get it. I mean, at the end of the day, the cheapest rate isn't going to be the best loan. It's just not by nature built that way.
Yeah, and that raises the question, how would you say that as being a broker, you're much more competitive and different from the original loan officer? What can you offer as far as rates and programs and opportunities for the average buyer?
Okay. So over the last 13 years, I've worked at about 8 different retail mortgage companies. As a broker, I work at a mortgage company, but instead of being limited to one lender when I worked at those companies, I have 165 lenders. In fact, 6 of those companies I actually send loans to. And my loans going to them are cheaper than being an employee of that company. I won't mention the company's names, but there's one particular company that my buddy's rates are 1.5 points higher than mine, and I'm sending it to their company.
That's crazy.
It's just the reality of being a broker. I'm faster. I'm a lot less expensive. I can move costs and fees around because it's my company. It just means that I have the leverage that's needed, especially in this kind of market, when closing a deal quickly and saving a consumer money is the most critical piece of this equation right now. I just turned in a loan last night at 9 o'clock. I woke up this morning at 9 in the morning. It was already approved. It's a one-day approval.
That's awesome.
I guarantee other lenders, mortgage bankers, IMBs, none of them are doing what we do. They just can't.
I would say that's the number one thing that I get as far as a concern, the cost of the down payment, the closing costs, what the rate's going to be. Those are the most concerning things in people's eyes right now. So the fact that you can save them closing costs or get them a better rate by doing a deal with you and having those opportunities to shop between 165 different mortgage companies. I had no idea it was that many, but that's huge leverage.
Here's an example. Last year, did a VA loan. And because of the price of the home, it was almost a $700,000 home. He was going to have to pay his taxes and his escrow. Well, that was going to add almost $2,500 extra to his mortgage. Made him very uncomfortable. He felt angry. Why should he have to do this? Why should he have an escrow when the man has been making his mortgage payment for 10 years? Well, I can waive escrow on VA loans. No mortgage banker is going to do that. They don't care. They want the loan to be bigger so that they can make more money.
Yeah, to my knowledge, that's unheard of. Yeah, I haven't heard of that being done. That's awesome.
We're also waiving escrow on conventional loans up to 95% down. I can save a family thousands of dollars at closing when other people can't even touch me. Oh, yeah, and that's not even talking about the rate yet.
And sometimes that's the determining factor, whether somebody can afford a house or
Right.
wants to buy a house. That closing cost, that cash to close amount can make or break the deal. It really can. I do want to talk about what you're doing right now with refinancing, because a lot of people wouldn't think that refinancing is big for you right now, or what you can do with refinancing, or why people would want to refinance. I know one reason we're seeing some refinances is because people are accumulating a lot of debt right now with inflation.
Credit cards?
Yeah, definitely. With inflation going up, everything's going up. I mean, insurance is probably one of the biggest things that went up in the last couple of years. And with all these additional costs and with everything, people are accumulating a lot of debt. But since home prices are continuing to go up, guess what? They have a lot of equity in their home still, which they can tap into. Can you tell us a couple different ways that they can tap into that equity?
I'm going to touch on a personal note first. When it comes to the recession, when it comes to inflation, when it comes to the cost of just feeding your family, my dad is on a very fixed income because he's an elderly man. And my dad has no other recourse, no other support, nothing. If it wasn't for me being able to chip in to help support my dad would be out on the street, even though he has his own home. It's this recession, that may or may not happen, this inflation that already has been happening, it's hitting every family. And it's hard. And I respect that. And at the end of the day, going back to this refi question, I just did a refinance right now. I turned in. I'm making $500. Why? Because this family has the chance to save $250 off their mortgage. And that means that they might be able to afford their mortgage. That means that they should be able to afford to feed their family a little bit more. This isn't about money for everybody or every situation. I can't do that on every deal. But this is a family that bought their first home with me a year ago. And now I can help them and I can give some of that back. Refinances right now are probably one of the fastest growing parts of this market. I just did a refinance for a gentleman on a VA loan. His mortgage company, even though he had a 780 credit score, charged him 7.6 on the rate.
That's insane.
And I got him down to 6.1. And his mortgage company couldn't even compete with me. The best they were offering was a 7. This is a time to change the mindset. Do you know that mortgage brokers are now capturing over 30% of the market in business? Why? We're just better. That's just the bottom line fact. We don't have all these managers and overlays and office buildings and marketing budgets and, oh yeah, executives that got to take a cut. We don't have any of that. We're independent. So I'm faster. I'm easier. I answer my phone after 5 o'clock. I answer my phone on weekends. Nothing has changed in how we treat our customers. What has changed is now we can just do it better.
Yeah, going back to what you said about overhead costs, a lot of these big name mortgage companies that you see out there with all sorts of marketing or, just everywhere, basically, social media, everywhere, they have huge overhead costs. So they have to charge more for rates, or they have to increase their rates to cover the cost of all that marketing and all that overhead, which, like you said, you don't have that. You can work from home. You can work from anywhere.
I can tell you right now, the last mortgage company I was at, it's gross. The owner was talking about how difficult it was to generate profit in this highly competitive, rate-conscious market. And so he got all of the processors and support staff to agree to not accept bonuses. Yet he just bought a brand new $350,000 Porsche. Wow, that recession must be really hitting those mortgage banker owners.
Well, he really wanted 2. He only got 1.
Yeah, so, wow, what a shame.
I mean, that's that's crazy.
Yeah, it's gross. It's gross.
Yeah, man. Oh, let's go back to the customer that you recently were in talks with to help, where she had a lot of high debt and she was going to use her home equity to pay off that debt. How did that work?
So we had talked about that.
Yeah.
So in Texas, getting a home equity line of credit is a little bit of a challenge at a mortgage company. In fact, I would tell somebody if they just need a $20,000 or $30,000 or $40,000 line of credit, they're probably better off going to their bank. Now, let's assume they have the equity and let's assume they have the credit scores that the banks will accept. This lady was in a different position. Her bank didn't want her business because she had been out of work for 6 months. And she went to a mortgage lender and they denied her loan because they didn't like the fact that she had been out of work for 6 months. The irony is the guidelines allow us to do that loan. So when you had her talk to me, I couldn't do the HELOC or the line of credit for her because she needed a lot more money to pay off debt. What we were able to do is a refinance, and she was really unnerved by it because the rate what she had on her home was 3.99, I think. But when we spoke about the $40,000 of credit cards that she had, those were hitting her at 28% interest.
Sheesh. Yeah.
What we did was we were able to get an approved eligible loan, which means the automated underwriting system accepts her situation. Wow, so we can do it, but the banks wouldn't, and the mortgage companies wouldn't, but the broker could do it. Okay, great. But by doing the refinance and paying off all her debt, I was able to save her $834 a month out of her bills. That meant...
Plus all that interest.
That meant she could now buy food, pay her groceries, pay for that higher insurance. These things are happening and helping people. And it's a tough choice. Her first comment was, well, maybe I should file bankruptcy. I said, well, that's an attorney question. I can't answer that. I said, but if you want to keep your good credit, you want to keep your home and get rid of all your debt and keep money in the bank, I can help you with that. And we were able to help her. It's a good feeling.
Yeah, I don't think that really clicks for a lot of people. I don't think people think they can do that or know they can do that. But there's a ton of people that can, and a lot of people don't even know how much equity they have in their home. I'm telling you right now, if you bought in the last couple of years, like especially in 20 and 21, you have a ton of equity in your home.
Most of the websites across the country are saying that this is the wealthiest time of home ownership, people that have owned a home, because of all the equity that's built in there. And I get the reluctance to use that to pay off other debt. I get it. It's a genuine fear. You know, there's a lot of consumer advocates, I won't mention their names, that say, don't do that, don't do that. Pay off your debt, pay off your debt, pay off your house. We don't live in that world where some of these people are making $200,000, $300,000 a year. We live in a world where people are making $40,000, $50,000, $60,000, and they have equity that can get them out of the hole that this last 2 years has put them in. More importantly, it gives them the chance to keep moving forward with some dignity, not losing their cars.
Yeah, according to the recent economic data that our National Association of Realtors shares with us, credit card debt is at an all-time high in delinquency and just in general. So it's definitely, that other debt is definitely hurting people right now. And it's just going to accumulate more and more. So if you need a way to help you get out of that debt, you should look at your home's equity.
Yeah. We have a product that a lot of people don't like talking about, and it's really not so common, but it's more and more becoming needed, and that's a reverse mortgage. For an elderly person that may own their home, I just had a conversation with a lady 2 weeks ago. She owned her home outright. She had no mortgage on it, but the foundation was a little crooked. The windows were old. She had no central air. She would be cold. She had a space heater keep her bedroom warm. She was living in poverty. But yet she owned a home that was worth $300,000.
Wow.
And her daughter was trying to talk her out of it. Her daughter kept saying, well, that's my inheritance. That's my home when you die, Mom. So I asked the daughter point blank, are you going to fix her windows? Are you going to fix her house? Are you going to install central air? Are you going to keep your mom warm and pay her utilities? She didn't like that. She didn't like that at all.
No way.
But her mom did.
But that's messed up.
And guess what?
Yeah.
Her mom did the loan. She's now fixing her home.
That's awesome.
And she'll be safe this year.
So how does that work, reverse mortgage?
It's a complicated process. It's not an easy loan.
Simplify it.
The short answer is, once you reach a certain age, let's say 70, you have the ability to tap into a percentage of your equity.
Does the house have to be paid off?
No.
Okay.
Hell, my dad bought his house with a reverse mortgage purchase.
How's that work?
Let's pretend you're selling a house for $100,000. It's a safe home. Let's pretend that it's really worth maybe $130,000 or $140,000. That's not going to really happen in a lot of times. But
No.
my dad was able to get a home that was valued lower than that was sold lower than the actual value. So we used a reverse mortgage to buy the home, and my dad has not made a mortgage payment in 10 years.
Sheesh.
All that's required is you live in the home, pay your insurance, and pay your property taxes.
Where'd you find this deal? It had to be off market, right?
Yes.
Yeah.
I know a guy.
Hey, this is James with My Insurance Group with a brief interruption to this podcast. It is currently being shot in the My Insurance Group studios. So My Insurance Group is a local insurance brokerage. We are 5-star rated, and we provide policies for homeowners, auto insurance, and commercial business needs. So if you're looking for a great insurance agent, check out the number in the link below. We will definitely get you an insurance quote, or if one of your friends or family members needs a great insurance agent, keep us in mind and keep the My Insurance Group podcast studio in mind when you're trying to shoot video. Thank you.
Hey, Ryan, I've got a question for you. Are you seeing people that aren't going to live in the home, for investors, buying more homes, less homes? Would you say it's the same amount of activity? Would you say it's harder? Would you say it's easier for them? Talk to me about what you're seeing with investors.
As far as investors, I feel like there's less investors doing the buy and holds right now because the rates, unless they're buying cash. It doesn't make sense a lot of the times to buy a house because your mortgage is going to be the same or more or higher than your rental rate. So for an investor to buy a buy and hold right now, it doesn't really make much sense. There are still investors doing flips. If you can buy the houses.
What's a flip?
Remodeling a house, buying it, remodeling, selling it.
Got it.
So if you can find the house at the right price, you got to know your numbers. But if you can find the house at the right price, maybe going through the auction or a wholesaler that doesn't give you some false numbers, you got to do your own research and have a good realtor that knows what they're doing as far as the aftermarket repair value. You can definitely make a little bit of money going that route. So I'm working with an investor right now. We're going to go to the auction on Tuesday and look to bid on some houses to potentially flip.
Now, why is he a good investor in this situation? What makes him a good investor?
I actually don't know if he's a good investor or not, because so far the projects that he's worked on so far, I don't think they've been the best purchases. One recent flip that he did and that I'm going to list soon, he put in way too much money in it, and there was a lot of unforeseeable stuff that he didn't know about, but he could have done a little bit more in the beginning as far as inspections and due diligence to look at certain things, to know whether or not it was going to be a good deal off the bat or not. We're going to try our best on that one to make a little bit, if not break even, because he's in it heavy. But this is the first time I'm working with him. He's kind of going into this like off a whim and with no guidance, just diving straight into it. And since I've done a couple flips myself and helped other investors do flips, you connected with me. And I think I'll be able to help him a lot in the future. Just educate him on everything and what to look at. He's learning a lot, it sounds like, but it's definitely a learning process. It's a huge learning curve in all this. Anything you go into that's going to be profitable, right? So the conversations we've had, I think they've been pretty productive, and we're going to see what we can find on Tuesday and go from there.
You know, when I look at investments, it's a situation where it's risk, but the reward can be massive or it could be expensive. If I look at buying an investment property, whether it's for me or for our family or to help others that have come across, part of that relationship that I've got isn't, again, we're not just talking about the rate and the payment. We're able to talk to them about where would it be in a year, what rent could you get when you're done, how long is it going to take for you to fix. So there's some different leverage points that I think I have, that you have. Plus, you and I have actually worked together on a flip. On 2 or 3?
2.
2, yeah. So we have a lot of background that I think helps. Am I an expert? Nope, I'm not. But I'm really good at making money. And you are too. And I think that's what helps some of the people that we speak with that are investors or that want to be investors.
And you can offer those loans too, right? The investor loans.
Let's talk about that. So on any of the non-QM loans, unlike traditional Freddie, Fannie, FHA, USDA, VA loans, unlike traditional loans where I'm limited to the states that I'm licensed in, which is Texas, on those investor loans, I can do them anywhere in the country. In fact, I'm doing a deal right now in Seattle, Washington. I connected him with the lender. We agreed on the numbers. We agreed on the rate. We negotiated the comp on that deal. And bam, we're done. He's buying the house, closes in 2 weeks, I think. And he's happy.
That's awesome.
But it also helps because he owns a construction company. So he's already done this. And he's got the resources. And he's got the staff and the labor. And it's his hometown. So it became a perfect scenario for him.
That's awesome. One thing that I really wanted to talk to you about, and there's a lot of questions around it, is self-employed people. As far as getting the mortgage for them, how difficult is that? What do they need to look at? What's the most common issues holding them back from getting a loan?
A traditional loan, again, Freddie, Fannie, FHA, is going to require that they've been self-employed for 2 years. They're going to look at the average net income. So the whole value of being self-employed is the opportunity to use your business expenses to reduce your tax footprint. But when you do that, it makes it look like you make less money on paper, which is what the government requires we look at, your net number. I did a loan for a guy that had $1 million in overall sales, but his net income at the end of the year was $82,000.
He was trying to buy, what, $1 million house or what?
Yeah. Now, for him, I have other products. We can do a bank statement loan where we're going to look at his bank statements over 12 months or 24 months. And what will happen is the investor will look at all those bank statements, calculate what comes in, calculate the consistent expenses that go out, back out any payroll adjustments, and that number is typically a lot larger than what would have been on a tax return. We can do a P&L loan where basically a CPA does a P&L analysis of their business and work off that. We've got investor loans for non-citizens. And without touching on a sensitive subject regarding what just recently happened, what was it called? Removing immigrants from buying homes. It was, I think, with DACA. And without touching into that subject, the investor loans, the non-QM products, are still out there and available. It's a little difficult. It's not going to be that sexy 6.5% rate. Might be a 9% rate. But you know what? It's better than paying rent.
Yeah, I mean, you have a ton of products that can get around pretty much everything.
Yeah, I do.
When it comes to home buying. That's also something I'm glad you brought up, because these self-employed people, maybe they haven't been in the business for 2 years, or they've wrote off a ton on their taxes to save from paying so many taxes. So to offer a bank statement loan or a P&L loan, that's money right there.
Here's a good story. I won't mention the people, but about 6 months ago, 8 months ago, I had a situation where buyer says he owned his own company, made a ton of money, and it was difficult getting tax papers and financial records from him. His CPA was out of the country. Fine. We did the loan and we structured the loan, and it was going to be only like a 15% down payment. Well, when we finally started getting paperwork from the CPA that was out of town, we discovered he didn't own the business for 100%. He was a 25% owner.
Oh, shit.
Lender wasn't happy, not one bit. I have a relationship with the lender. We were able to speak about it. We were able to balance some of the other strong points in the file. And the lender said, I'll keep the rate. We'll still do the deal, but I want 20% down.
It's not bad.
Not bad. Unfortunately, a week later, CPA sends me more documents. Yeah, that business wasn't in business for 2 years. It was in business for 11 months.
So you definitely can't do it then, right?
I went back to the lender. I got yelled at because they were annoyed. But after we spoke through it, we were able to get the deal done. All we asked for is 25% down. And we
nice.
still did the deal. So
That's awesome.
that's the value again with a broker is having 165 different channels to shop a loan around. Somebody's going to want to do that deal. It may not be what you wanted with the rate or down payment, but you know what? We can do the deal. And that's what's happening right now. I probably doubled my business.
Yeah, with loans like that, I can imagine it's higher risk for the lender.
Yep.
Equals higher rate, typically higher down payment, typically.
Rate is risk. Risk is rate. That's just math.
But it makes sense, and I mean, if everybody's happy,
It makes dollars. I had to go there.
Cool.
What do you think is happening when you're looking at homes? Are you seeing homes in ideal condition to sell, or are you seeing homes where maybe something's wrong with it and there's some leverage there, or are you saying or would you say it's basically just the same as normal when you're out taking your family shopping?
I've seen a lot of homes as is, but what we're seeing for homes that are moving faster on the market, if you put a little bit into your home before you list it, maybe paint or new flooring or update the kitchen, some of the hot things that buyers love. It's all about first impressions. So if you put a little bit into the house before you list it, you're looking at less days on the market and selling the house for as close to list price as possible. Now the average house probably sells about like 90% of list price right now, maybe 95. A lot of that's due to the concessions that they're asking for too, because almost every buyer is asking for concessions right now. I mean, if you compare an existing seller to a builder, the builder will blow them out of the water with concessions. Builders are offering stupid concessions on rate buy down, but also closing costs as well.
Well, they own the lender, they own the insurance company, they own the title company. It's almost a little, wow, that's kind of convenient.
They have huge leverage. Yeah.
Right.
They have huge leverage. They have a lot of inventory right now. Inventory in San Antonio is about 5 months, like we discussed earlier, a little higher than some of these other big cities in Texas. And so there's a lot to choose from. So
I've got a question for you, going back to that question about the condition of the home and does it make sense to do some little work. Again, I'm going to go back to the same thing. People are scared to spend money, right? They're worried about inflation. They're worried about a potential recession. It's in the news every day. They're worried. I don't want to throw any money in my house. I just want to move on to the next one. But I know that fresh paint, maybe some new countertops, that makes a world of difference. Fixing the gutters. I mean, basic things. Basic. Changing your fixtures so that you don't see that little white film everywhere. All those little things matter. Here's a question. Have you done any deals where somebody gets work done and then does a bill at closing to pay for that work?
Oh, yeah. Yeah. I think by this point, it's all about connections on who you know as far as contractors that are willing to do the work, float the money, and get paid at closing. It's rare, but there are a ton that do it. And I think just being in the business and networking and talking and figuring out which contractors are willing to do that trust you and you trust them. That is an option. That definitely is an option, and it's worth tenfold if you do the right things.
I mean, let's be real. A couple grand, $3,000 to refresh a house, we might not think that's a lot of money, but it goes a long way. Whether it's just painting some rooms, refreshing a bathroom even.
Yeah.
It's something that somebody's going to probably value, make it a little easier to sell, not sit on the market so long. Are you seeing realtors that are doing listings, are they offering that to their clients, or is it something that just you do?
As far as getting contractors to do work and getting paid at closing, I don't think a lot of realtors are offering that.
That's a shame.
I think I don't want to step on anybody's toes or talk down on realtors at all. But
I'm not trying to either.
I think the average realtor wants to list your house. It may do a great job promoting and marketing and listing it, but in this market right now, I really pushed the past buyers that you just dealt with. I really pushed them to put a little bit of money in their existing home that they had, in order for us to get a whole lot more for it. And I know they're on a time schedule to where they need to sell that house ASAP. They don't want to have 2 mortgages. They're not interested in renting it out. They have a ton of equity in that house. To get the house sold faster and for more, it just makes sense. And I knew that they had a little bit of money to work with. I know that area. I know that market very well. We can see some really good comps in the area. They were either flipped or updated a little bit, selling for a whole lot more and faster. So we have the capability to see that and to show that proof of concept to where it just makes sense to do it. If you have the money to do it, or if you can find the contractors that are able to do the work and get paid at closing. You don't know when this house is going to sell, so I mean it's a hard pitch. If you
I
don't,
get it.
If
it
you
could
don't have
be
the right
2 or 3 months.
Yeah, if you don't have the right contractors in place and have the right connections in place, that's a hard pitch. I've heard of different companies, like different brokers or agents, putting money into the house themselves. They'll charge you a higher commission to do it. Basically, they float the money, and
That's creative.
they'll go in and do the work, float the money, and they'll get paid an extra, like a little bit extra at closing for that process and for that. And that may be what you're having to do right now in this market, because houses are sitting for a lot longer than they used to sit. I mean, we're looking at probably 60 to 80 days on average for most houses, and that's if you have it priced right. I mean, there are some houses that are priced really aggressive. They can still go in 30 days, but I mean, it really depends on the area too. You know, the price point, houses under 300,000 are selling a whole lot faster than some over 300,000. Something very surprising though, the luxury market has picked up a little bit. There's more luxury homes, over 500, over 600,000 selling here in San Antonio. Probably a lot of people from California or upstate or up east, northeast New York and up that way, coming to mind and purchasing here. Maybe people relocating because they can work remote. People from Austin, I imagine, coming too. But the luxury market has definitely picked up a little bit too.
Being a veteran, what I'm seeing is I'm getting a lot of VA loans. People that are choosing to come back to Texas because obviously with a veteran that's 100% disabled, they can completely waive their tax liability. You know, let's just be real, on a $700,000 home, and I'm not saying that's for everybody, but on a $700,000 home, that gets rid of $14,000 to $16,000 of debt each year from their payment, and they can afford that $700,000 home. That's what I'm seeing on my end. And then they'll use that money or some of that savings, and they'll buy down the rate up front.
Yeah, people don't realize, like, if you look at the nation stats, like the average home is like around 400,000 or something like that. Like San Antonio's median price is 300,000. So there's a lot of affordability here.
Yeah, I agree.
Texas, San Antonio. So I wouldn't doubt that. I mean, that that's true at all. We're a big military city.
Yeah, it helps. Ryan, I really appreciate the time that you and I have given each other over these last 2 or 3 years, working together, getting to know each other, becoming friends, but more importantly, also trying to bring value to other people. I wish we had made a more consistent effort over the last couple of years, but I truly believe that you and I are focused now, especially to start doing this more consistently. I want to say thank you, Ryan, for giving me the opportunity to work with you and do these kind of podcasts, share this kind of communication, because I think it gives other people just another perspective versus what the news or the media or their friends said they think is what's happening. It should give people an opportunity to at least just see our perspective.
I appreciate you saying that. There's a ton of negativity out there in the media right now regarding the recession, rates, inflation, home buying in general, the stock market, tariffs, all this stuff that just continuously confuses people. So the goal of getting on here and doing this with you is really just to educate the consumer, first-time buyer, second-time buyer, the options for people.
Agreed.
To use their equity, to use the cash they have in the bank. We want to give people confidence that they have an option to do something in real estate. If you look at the average renter versus a homeowner, the stats show you that your net worth is a whole lot more if you own some real estate. If you're a homeowner in general, you're building that over the years, especially if you bought 3-4 years ago. You have a ton of net worth now because of the equity in your home, and that'll just continue to go up. I mean, even though it's going up slower, even if we did go into some type of recession, what always will happen, and history shows us, is that it'll always bounce back. And
it always does.
And a lot of times it bounced back a whole lot stronger than you would ever imagine. And that's what tells you it's a time to buy. When everybody's running the other way, it's a time to run the opposite way.
Agreed. Thanks, Ryan. Appreciate your time.
Thanks, Carlos.